Okay, let's unpack this. Imagine getting a turbocharged summary of the most important happenings at a company right at the forefront of a truly dynamic industry.
Hmm.
That's really our mission today. We're diving deep into the latest insights from Coinbase's Q2 2025 performance, drawing directly from their recent shareholder letter and 10Q filing.
Yeah, lots to chew on there.
Definitely. We've got a lot of ground to cover, from, monumental legislative wins to some pretty surprising financial shifts, and even some of the hidden costs maybe of operating in such a rapidly evolving market.
He really is.
Our goal is to sift through the data, connect the dots so you walk away truly well informed with those hopefully aha moments you love.
And it's fascinating, isn't it, how the interplay of policy, product innovation, market dynamics, it all creates such a complex picture for a company like Coinbase.
Totally.
We'll be looking at not just the headline numbers, but the strategic drivers behind them and what they really signify for the broader digital asset space, its future direction.
Absolutely. Let's start with a massive development then on the policy front. We saw some truly monumental milestones in July that could genuinely reshape the playing field for crypto in the U.S.
Yeah, huge news.
Can you walk us through the significance of the Genius Act and the Clarity Act?
Absolutely. And when we zoom out a bit, these aren't just like minor legislative tweaks. They're pretty foundational.
Okay.
The Genius Act, signed into law in July, it's actually the first ever U.S. federal legislation specifically addressing digital assets.
The first ever. Wow.
Yeah. It establishes clear rules for USD stablecoin issuers and custodians, and that is just huge for bringing regulatory certainty to what was, frankly, a pretty murky area.
No kidding. Certainty is key.
Right. And alongside that, the Clarity Act passed the House with strong bipartisan support.
Bipartisan, you don't hear that often.
Exactly. Which really underscores crypto as potentially a unifying issue in Washington. So together, these acts create a more comprehensive regulatory framework, specifically for stablecoins and tokenized assets. Which, raises an important question.
Yeah.
What does this level of clarity mean for U.S. leadership in digital finance? And critically, for Coinbase's operational opportunities right here in its home market.
That newfound clarity sounds absolutely crucial for, well, sustained growth, I'd imagine.
Definitely.
And it wasn't just domestic policy gaining traction, phrase. We also saw some significant international movement.
Precisely. Coinbase also secured its MiCA license in Europe.
Mega, okay.
Yeah, and this is another step toward sort of a global alignment of thoughtful pro-innovation frameworks.
So things are starting to sync up more globally?
It suggests increasing momentum for the industry,
Yeah.
Finally moving past years of regulatory ambiguity and maybe paving the way for more mainstream adoption.
Okay, so beyond policy, how is Coinbase actually building out this financial system on-chain they talk about? What are the, concrete steps they're taking to expand access and utility for everyday users?
Well, they're making pretty significant strides on multiple fronts. In Q2, they expanded trading access through innovative derivative products and by listing more spot assets, broadening their global offerings.
Right, the trading side.
But what's particularly noteworthy, I think, are the payment-focused innovations.
Okay, like what?
Things like Coinbase Business, the integration of USDC with Shopify, and the announcement of the Coinbase One card.
Oh, the card, right.
These efforts truly deepen the actual financial utility of their platform, moving beyond just, speculation.
So it's clearly not just about trading anymore. It's about making crypto far more usable, like in everyday transactions.
Exactly, making it useful.
But none of that happens without a strong foundation, right? What steps are they taking on the tech infrastructure side? What makes all these innovations possible?
That's right. Good point. They've also had significant infrastructure upgrades. Notably, base chains decentralization milestones,
Okay.
faster transaction speeds, and expanded stablecoin distribution. This reinforces what they call their platform flywheel.
Platform flywheel. When you say that, what exactly is happening there? Like, how does one part of their business feed into another?
Well, think of it as a sort of self-reinforcing cycle. Improved tech infrastructure makes the platform more reliable, right? That attracts more users and developers. More users mean more liquidity, more data, which in turn lets them build even better products and services.
Got it.
And those better products then attract even more users. It's how they aim for, exponential growth and deeper engagement across their ecosystem, empowering both individual users and institutions alike.
Okay, that makes sense. So we've looked at the big picture policy, product development. But how does all this translate to their financial health? Let's crack open the
The
books.
numbers, yeah.
What do the numbers tell us about the fruits of their labor? And maybe some unexpected costs, too. Their net income saw an absolutely massive jump,
Huge jump. Oh,
going from, what, $36.2 million in Q2 2024 to $1.4 billion in Q2 2025. What is driving that dramatic, nearly 40-fold increase?
yeah, that's a truly eye-popping number, isn't it? And it's a key detail to unpack.
Definitely.
The net income increase was largely impacted by significant pre-tax gains.
Yeah.
So $1.5 billion from strategic investments, which notably included an unrealized gain on their investment in Circle.
Unrealized, key word there.
Very key. And a $362 million pre-tax gain on their crypto investment portfolio, which was also, again, largely unrealized. So this is a crucial distinction. While the JAF numbers look fantastic,
Right.
it really highlights the inherent volatility and, frankly, non-liquidity of certain crypto investments. It means their reported profit is largely a paper gain,
Ah, okay.
not actual cash they can immediately reinvest or distribute. It's less about their operational success in the quarter and more about market movements.
So it's not really reflecting core business performance.
Less reliably, no. It's kind of like owning a painting that suddenly doubles in value on paper. You're richer, sure, but you haven't actually sold it and put cash in your pocket yet.
Gotcha. So a lot of that income isn't cash in hand, vital to understand. They also mention adjusted EBITDA as a key metric that tells a different story.
Right.
For those of us maybe not fluent in financial statements, why is adjusted EBITDA the metric to watch here? What does it really tell us about their health that net income doesn't?
That's an important question. Think of adjusted EBITDA this way. It's like the company stripping away all the one-off events and complex accounting entries
Okay.
to show you how profitable their core business operations truly are.
The core business.
Yeah, it gives you a cleaner look at how much cash their main trading and subscription services are generating, separate from big swings in their investment portfolio
Yeah.
or those unexpected costs.
Like the data theft incident.
Exactly.
Right.
For example, it excludes the substantial losses directly related to that data theft incident in May 2025.
Right.
And it excludes gains or losses on crypto they hold for investment because that's not part of their day-to-day revenue generation from the platform.
Right. So what was the adjusted EBITDA then?
Adjusted EBITDA for Q2 2025 was $512.1 million, which was actually down from $595.6 million in Q2 2024.
Down. Okay, see, that is a very different story from the $1.4 billion net income.
Very different. It paints a more realistic picture of the underlying operational trend year over year for that period.
Let's break down the actual revenue streams then. How did transaction revenue compare to their subscription and services revenue this quarter?
Okay, so net revenue for Q2 2025 was $1.4 billion, which interestingly was essentially flat compared to Q2 2024.
Flat year over year, okay.
Right. Now, transaction revenue slightly decreased quarter over quarter from about $781 million down to $764 million.
Why was that?
It was mainly due to a lower average blended fee rate on consumer transactions. That was influenced by a shift from simple to advanced trading.
Ah, the different fee structures.
Exactly. And also growth in Coinbase One users who often get fee discounts. This happened despite a 60% increase in consumer trading volume.
Interesting. So more volume, but lower average fees.
Precisely. Conversely, subscription and services revenue saw a strong increase. It was up 9% quarter over quarter from around $599 million to $656 million.
Okay, what drove that growth?
The primary driver there was a significant increase in stablecoin revenue. That was up 38%.
38%. Why?
Mostly due to higher average USDC balances held in Coinbase products. So even though average interest rates actually declined a bit,
Right.
the sheer volume of USDC balances people held with them increased enough to drive that revenue growth.
Got it. Volume trumped lower rates there. Now, beyond the top-line financials, what do the numbers tell us about how people are actually using Coinbase? What do the key business metrics reveal about user engagement, platform activity?
Good question. So monthly transacting users, or MTUs, increased by 6% quarter over quarter to 8.7 million.
Okay, decent growth. What influenced that?
It was largely influenced by, overall crypto market sentiment and higher crypto asset prices during the period. Bullishness brings people in.
Makes sense. What about assets on platform?
Assets on platform, AOP, grew impressively, up 63% to $425 billion as of June 30th.
Wow, 63%.
Yeah, huge growth there, driven by a combination of factors. higher Bitcoin units held on the platform, Bitcoin price increases,
Hmm.
and also growth in USDC AOP, likely helped by their rewards program.
Okay. And total trading volume.
Total trading volume increased by 5% quarter over quarter to $237 billion.
Right.
But what's interesting here is that while the overall U.S. spot market trading volume grew faster, Coinbase's share actually saw a decrease.
Oh, why would their share go down if overall volume was up?
Well, they say this was due to an intentional pricing change they made for USDT.
USDT, Tether. Okay.
Right. Part of their evolving stablecoin strategy. It seems like a strategic chess move.
How so?
Well, by making USDT trading potentially less appealing through pricing, they might be encouraging more activity in USDC. Remember, they have a direct investment in Circle, the issuer of USDC.
Ah, right.
And they also gain revenue from USDC balances held on their platform, as we just discussed.
So it's a calculated trade-off, maybe sacrificing a tiny bit of short-term USDT volume to boost their strategic interest in USDC long-term.
Seems like it. Prioritizing long-term strategic positioning over just maximizing short-term volume numbers.
Okay, interesting strategic layer there. Shifting gears from the revenue side, I noticed some interesting shifts in operating expenses too. What stood out there, beyond the obvious perhaps?
Well, general and administrative expenses, G&A, were down 10% quarter over quarter,
It's good. Why?
driven mostly by lower policy-related spending and maybe softer market conditions, though that was offset a bit by higher professional services for M&A activity and global regulatory compliance, including getting that MiCA license.
Right. Compliance isn't cheap.
Definitely not.
Right.
Sales and marketing expenses were also down slightly quarter over quarter. But the notable point there, perhaps, is the increase in USDC rewards payouts we mentioned earlier that hits the S&M line.
Okay.
However, the real story in expenses this quarter is under other operating expenses, net.
Yeah. What happened there?
It increased massively, jumped to $308 million.
$300 million. What caused that?
This is primarily due to losses directly associated with the data theft incident disclosed back in May 2025.
Ah, the data theft.
Yeah, that $308 million included things like voluntary customer reimbursements and direct legal costs related to that incident.
Wow. That's a significant hit from a single event.
It absolutely is.
Oh.
And it's not just a financial hit, right?
Yeah.
It's potentially a significant blow to trust and reputation in an industry where security is just paramount.
Totally.
It really highlights the inherent, sometimes hidden risks of operating in this sector.
A staggering $308 million hit from data theft. Beyond the immediate financial impact, what does an incident like that reveal about the ongoing operational challenges, the need for really robust security?
Well, it's a stark reminder, isn't it, that even the most robust security systems are constantly being tested, constantly under attack.
Yes.
For a platform like Coinbase, handling billions in customer assets, any such incident impacts trust. And trust is the absolute bedrock of any financial service.
Absolutely.
So it forces them to not just reimburse, but to continuously invest massively in hardening their defenses, enhancing their incident response plans, and importantly, transparently communicating with users to try and regain confidence. It's just an ongoing battle in a world, rife with cyber threats.
The constant battle. Speaking of risks and challenges, how is Coinbase navigating the broader legal and regulatory landscape these days? We saw that significant SEC lawsuit dismissed, right? That seemed like a big deal.
That's correct, and it was a big win for them. The SEC lawsuit filed back in June 2023 was jointly dismissed with prejudice in February 2025.
With prejudice, meaning it can't be refiled.
Exactly. So it's a very positive resolution for the company and arguably for the broader industry as well. However, other legal proceedings do remain.
Like what?
There's the Underwood et al. Class action lawsuit, where claims under the Securities Act and state statutes are proceeding to the discovery phase.
Okay, so that's ongoing.
Yes. And also, while some state securities regulators have dismissed their actions regarding Coinbase's staking services,
The staking issue.
agreements with California, New Jersey, South Carolina, and Wisconsin still prevent customers in those states from staking new funds.
So it's
Yeah.
not fully resolved everywhere.
Not fully, which points to the ongoing kind of regulatory mosaic the company operates within.
A regulatory mosaic. What does that mean for a company like Coinbase in practice, day to day?
Well, it means they're not dealing with one single unified set of rules, right? Instead, they're constantly piecing together compliance across dozens of different states, each potentially with its own specific requirements or interpretations.
Yeah.
And then you layer federal and international regulations on top of that. It's like navigating a legal minefield, state by state, country by country. Adds immense complexity and cost to their operations.
I can only imagine. And they're also making strategic moves in this environment, right? Like the Deribit acquisition.
Yes, definitely. A definitive agreement was signed in May 2025 to acquire Deribit,
Which is a big player in derivatives?
a major crypto derivatives exchange, yes. The deal was for $700 million cash and over 10 million Class A shares.
Significant investment.
Very. This positions Coinbase to become, potentially, a premier global platform for crypto derivatives. It indicates a strong focus on expanding their offerings way beyond just spot trading and into more sophisticated financial products. That's seen as a key growth area.
Right, moving up the value chain. So beyond these specific legal cases that the SEC won and strategic plays like Deribit, what are the overarching risks that still remain for a company like Coinbase, operating in this, well, still evolving space?
Yeah, if we look at the broader implications, the risks are indeed broad and often interconnected.
Such as?
Well, first and foremost, the highly volatile nature of crypto asset prices and trading volume. That remains a core dependency for their transaction revenue.
Always the volatility.
Always. Then there's continued regulatory uncertainty, even with genius and clarity, around emerging areas like other types of stablecoin as privacy-enhancing crypto assets implementing the travel rule globally.
Okay.
Then there's competition, intense competition,
Yeah.
often from unregulated or less regulated platforms operating offshore.
Right. The playing field isn't always level.
Not at all. There's the constant need to keep pace with incredibly rapid industry changes. The ever-present threat of cyber attacks, as we saw highlighted so starkly with the data theft incident. Even just maintaining key banking and financial institution relationships can be a challenge in this space.
Still, even for a company their size.
It can be. The company also highlights risks related to, protecting their intellectual property, attracting and retaining top tech talent, which is fiercely competitive.
Yeah.
And the complex, often fluctuating accounting rules for crypto assets,
Right.
like the recent changes with ASU 2023-08 and SAB 122, which can significantly increase income volatility on paper, as we saw with the net income figure.
Lots of moving parts, lots of risks to manage.
A very dynamic environment.
So to wrap up, we've taken a pretty deep dive into Coinbase's Q2 2025. We're seeing a company that's strategically navigating a really complex regulatory environment, innovating with new products and infrastructure like the payments focus and base chain upgrades, and also grappling with both significant financial gains, although much of that unrealized and these big one-off operational costs like that major data theft incident.
Yeah, and what's truly noteworthy here, I think, is the company's clear drive to solidify its position within a regulated on-chain financial system.
Yeah.
That seems to be the North Star.
Right.
Despite all the inherent volatility and the evolving risks we just talked about, their impressive growth in assets on platform, those strategic acquisitions like Deribit, they really underscore a long-term vision.
Building for the future.
Exactly. Even if it means making some short-term trade-offs, like maybe that USDT pricing change, or dealing with increased operational complexities from things like the regulatory mosaic or security incidents, it's a real balancing act.
A tightrope walk, as you said earlier, indeed. So what does this all mean for you, the learner? Perhaps the biggest takeaway is that while the crypto world is still, a wild frontier in many respects,
It certainly is.
the push for clearer regulations like we saw with Genius and Clarity and the drive for more integrated financial products like the payment solutions, that's clearly gaining momentum.
The direction seems clear.
Yeah. The big question remains, though, how quickly will these foundational shifts actually translate into widespread, seamless adoption for everyone? Something to mull over, perhaps, until our next deep dive.